Hi everyone, Dale Anderson here from Fabrik Invest. Hope you're keeping well. I just wanted to bring you some information on the latest news around the UK rental market. As you know, Fabrik Invest, we take the research side of things very serious, so constantly looking at the latest market news to help keep our investors fully up to date and educated on what's going on. So I wanted to take you today through the latest UK rental market report, which has been produced by Zoopla. Rightmove do a very similar one. So those are the two largest property listing websites in the country. So they collect all the latest data. Headlines of this last quarter, the latest rental growth, supply and demand stats, the most and least affordable rental markets in each region, and is wage growth keeping pace with rental growth? The simple answer is no. Rental inflation seems to be growing. So UK rental growth is being driven by high rental demand, limited supply, trends that are more pronounced in city centres. The surge of post-pandemic pent-up rental demand will normalise through Q2 and Q3, we expect. However, that means rental growth levels will start to ease. So affordability considerations will also start to put a limit on further rental growth. This is basically due to inflation. So people are now looking again at properties, apartments, for example, increased interest as opposed to houses closer to work where offices are reopening up. So young professionals are moving back to the cities. Rents are likely to continue to rise for longer in areas which have most constrained stock levels, such as London, the southwest, and the major cities. So I'm just going to share a screen with you quickly, just so we can run through that report. Where is it? Rental affordability. That's the one. There we go. So this is the current rental market. We'll just download that report there. And that'll give you some key stats there on the market. So plus 9.1% annual change in rents in the UK, excluding London, 15.7% annual change in rents in London, and plus 11% annual change in rents in the UK. So quite a jump there. 37% affordability of salary to cover rent as a single earner in the UK. 14 days average time to let a property. So great thing about UK properties, you tend in the major cities or towns is you tend to have minimal void periods because there's a very high generation rent, they call it, high tenant demand for people looking to rent, and £995 is the average monthly rent. So in summary, UK annual rental growth for new lets rises to 11% in Q1 2022 as demand continues to outstrip supply. Rents have bounced back quite a lot since fall a year ago, and wage growth hits 8.8% last year. Cumulatively, UK rental growth has not kept pace with earnings or inflation since 2016. So rental demand is particularly acute in city centres as students, office workers, and international demand starts to return. So areas that we focus on, we're seeing a huge amount of demand for rental property, and rental prices are going up. Cities like Preston, Sheffield, Birmingham, Manchester, you can get some very good, decent yields of around 5-6% plus. Short-term lets even higher, sometimes 9-10%. So the rise in rents is pushing up the affordability to 37% of gross income. Tenancy links continue to rise, signaling some renters may be rolling over their rental contracts. Rental growth will start to slow in H2 as the bounce back eases and more challenging economic conditions emerge with inflation and interest rates and everything else that's going on at the moment in the world. So high levels of demand amid constrained supply are still putting upward pressure on rents, and affordability pressures will mean an easing of the rentals. £830 is your average monthly rent. That's excluding London. And you can see there's a chart here, rents rising at the fastest pace outside of London. So we've got that chart there. Rental growth continues to gain momentum. Average rents have gone up. And here we've got a chart of the average rent per calendar month. London rental growth is the black line, and then the purple one is the rental growth in other areas. And the pink line is UK except London rent per calendar month. You can see there that's excluding London, where the rental growth is going up the most. So the rate of rental growth has gained momentum across most markets in the last 6 months. post-pandemic surge back to the cities, so the main cities, people are getting back to the offices, in their workplaces. The sharp growth comes off the period of moderate rental growth in most of the UK. Cumulative UK rent growth since the start of 2016 totals 16%. Compared to average wages and CPI inflation, average rents have not kept pace since 2016, as shown in the chart below. So you've got your inflation, the purple line, earnings, and the light purple, and then the pink line is your rents year on year. So regional trends, we are seeing changes in different areas. So as the map page 6 illustrates, there's been strong annual rent growth across most regions. Chart below, we've compared how the rental growth registered over the last 2 years translates into monetary terms. So here's your changes in money terms. And then the chart below shows the dynamic in terms of supply and demand across the regions. So you've got London, demand, total supply, demand, total supply, as you can see then the Southwest and the East Midlands as well. Affordability, the sharp rise in rents has stretched affordability metrics, also the cost of living. Average rent now accounts for 30% of gross earnings for single renter. Around a third of renters are single earners, according to the English Housing Survey. Majority of renters who live with partners or share accommodation, gross earnings used for rent falls to 18.5% on average. So we are seeing a lot of people also moving outside of London to commutable towns such as Kent, Ashford, Luton, Milton Keynes, where they can easily still travel into work, or maybe a hybrid of working from home and working at the office in London. And then people also moving up to sort of Newcastle, Edinburgh, Cardiff, all these main cities, which are the most popular, but more affordable cities, of course, compared to London. So the above chart shows the rental market's highly localized, while the purple dots show the average proportion of a joint's income that needs to cover rent. The spread around this average is larger, especially in the Northwest and in London. So yeah, as in the sales market, many rentals will be centered in a location due to family, work, or school. So location becomes an important factor for renters, but also affordability. So yeah, another way to do this is they put in their current rental property as often tenants in situ can strike alternative rent deals with the landlord, especially if the landlords want to avoid a void period in the property. They'll continue to stay in the same property. So outlook, 37% long run average rental affordability, rental proportion of a single earner gross income. The UK rental growth has been driven by high rental demand and limited supply, basically. At the same time, stretched affordability. Renters with more disposable income can adjust their property choice in order to limit their rental payments. Those that are more economic end of the market have less choice to do this and are mostly impacted by rental rises. So yeah, lack of supply is a wider structural issue in the private rental sector, as buy-to-let landlords are not investing at the same pace as they were before tax changes, which have introduced since 2016. So again, another thing there which the government's probably not looked at strategically is private landlords. They feel the market, they are helping properties get built, they're investing in rental property, and the less attractive the government makes, the less rental stock is coming to the market because of taxes to landlords. So even so, the market has registered double-digit annual rental growth. Landlords in local markets will find increased sensitivity. There's a question around rising interest rates, whether renters will feel the impact of rising mortgage rates for landlords, where they'll pass on those costs to renters, which I can see is already starting to happen. So we expect rents to continue to rise this year, but at a more modest pace with UK rental growth. London at excluding London, 4.5%, and independent forecasts for earnings. London rental growth, we're running around 3.5%. So rents outside of London are going up quicker. Here's your map. These are where rents are going up the fastest. Manchester, 14.3%, Belfast, Birmingham, Nottingham, all sort of above 10%, Leeds, Cardiff, Sheffield. Again, so these are all areas where we've got some really great buy-to-let investments available, and you can benefit from the rental inflation and the positive yields. So that's your map there. So Northwest is leading one of the areas leading the way in terms of rental growth, as is the West and East Midlands, and even places like Wales and further north. So that's your data. These are the different areas and the average rent, your year-on-year growth, and then your 3 years and affordability percentage. So as always, we're happy to share this information. Feel free to speak to one of your consultants. They'll be able to provide you with the latest reports, and also let you know about some of the latest buy-to-let investments we have available. We hope this is useful. Any questions, feel free to get in touch. Have a great day and enjoy the rest of your week. And yeah, we'll speak to you soon. Take care. Thanks. Bye.